Hi, I'm Pattu from FreeFinCal, and in this video, let's discuss how frequently do the stocks in an index change. So to find this out, let's go to nseindia.com, and if you go here, go to products, go to indices, and so if you are new to studying about various kind of indices, if you're new to things like Nifty Next 50, Nifty low volatility index, and so on, go to the about index page and you can learn more about them. There are broad market indices, sector indices, thematic indices, strategy indices. So all the low volatility index, the alpha or the alpha value based quality multi-factor indices, they're all there. So you can find out more about that. So I will do that. And if you're interested in from where I get my data for the calculations, there are two places. NSE India, this present website itself, this current website itself gives you a way to download data, but it's a little old style. You can only download about 365 days at a time and so on. The Excel sheets that I have are based on this website, and it was developed by a friend, Pranav Date. But NSE has since then developed a new website called niftyindices.com. The link is right here. You can go there, and that's much more flashier, and you can get the full historical data set from there. So that's where I downloaded if I want to do quick calculations. So for the present video, to find out how frequently stocks change, go to current market reports, go to view all monthly reports, and you should be able to see this gives you returns. This gives you the return of all the indices. This gives you the details of past changes to the constituents. This is the file that we want. But before we get there, you can also see some indices have the market capitalization and weightage in the index listed as a zip file. You can download that. But this is the Excel file that you need to download. I've downloaded that, and this is what it is. So let's start with Nifty 50. So the index name, event name, script name, and the description. This dates all the way back to 1996. You can go scroll down, and you can see that in September 2018, Lupin was removed from the index and JSW Steel got into the index. The last change before that, the last change was in April, and since September 2018, there has not been any change. Now, if you go to Nifty Next 50, again you can see here that in September 2018 there was a lot of activity. So almost look at this. So you have 1, 2, 3, 4, 5, 6 stocks. These 6 stocks were removed. Cummins, Emami, JSW, Power Finance, Punjab National Bank, Rural, REC, Bandhan Bank, Biocon were removed, and these stocks, sorry, not Bandhan Bank. Bandhan Bank was included, and then these stocks were all included into the index. So you can find the exclusion and inclusion stocks like that for all the Nifty indices here. This is in the Nifty 500. You can see a lot of activity here. For example, here from in September 2018, you can see so many, actually like something like 26 stocks were excluded and 26 new stocks were included. That's a lot of change. So I mean, just imagine the fund manager's plight if there is a Nifty 500 index, there is a Nifty 500 ETF, but the fund manager has a lot of work to do to replicate the index. This is a Nifty large mid cap. Okay, let's look at Nifty mid cap 100. This also has had some activity in September 2018. So something like 9 stocks have been added, but then not much change after that. There's one in April, there's one in September, but there's one in June, so and so on. You can actually check in the fact sheets how often these changes will occur, and you can also see what the stocks. The problem is usually the NSE or the BSE will announce which stock will be removed and which stock will be added. Then that will affect the price of both the stocks. There are some problems with that, but well, you can't get around with it. So in some other indices like Nifty low volatility 50, so these are 50 low volatility stocks from NSE 200, I think, if I remember right. There's not much of change here, so there's only 1 or 2 stocks get changed every few months or so. The reason I'm making this video is that if you want to replicate this kind of, for example, if you want to track Nifty low volatility 50, choose 10 stocks from that, then you can see that the changes are not so frequent. Nifty low volatility 50, Nifty 50 alpha, value 20. See, these are 20 value stocks from the Nifty 50. Again, here the change is not so much compared to the broad market indices, naturally, because they have lot more stocks. But it's, the point I'm trying to make is, if you try to track these strategy indices, for again the Nifty Alpha 50, if you try to track them, it's sometime this is an exception here. The Nifty Alpha 50 has got a lot of indices change, but many of them, for example, the low volatility 50 and so on, they are not much of Nifty Quality 30. These are 30 growth stocks. Not much change. So for example, Nifty Quality 30 after December 2017, there has not been much change. So it's quite okay to track them. Of course, how to track these indices? I publish a lazy investing 5 test stock portfolios every month. The next one is due. You can choose the top 10 at any given point and buy that, and if as long as the stock in your portfolio is part of that index, even if it is not on the top 10, you can stay invested. But if it is removed from the index, then you have to remove the stock and then replace it with another stock that's part of the index. So if you do that kind of lazy investing, I think you should do well. I think even new stock investors can test these portfolios. For example, the low volatility portfolio, or the Nifty 50 value 20, Nifty Alpha 50, etc. These are all more or less solid companies, and you cannot go very wrong with these portfolios. So this is an alternative to index investing. If you want to get into direct equity investing, then I would say you buy solid stocks, solid large mid cap-ish stocks, and from the Nifty strategy indices or the smart beta indices. So these are actively that is, the stock selection process is active. They won't just look at the market cap. They will look at the rate at which the earnings are growing, whether it's price to book value, it's price to earnings. They will look at its volatility, etc., and actively select stocks and put it in the index. So you can actually, as of now, there are no strategy index based index fund. There are ETFs, but if you want to replicate this in your direct equity portfolio, it's possible. So I want to show you how frequently stocks and index change. I'll catch you again in another video. Bye bye.